Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the Forex market. So today, as usual, we have prepared the report where we also have considered the situation in the United Kingdom, because as we said previously last month that actually Japan and the United Kingdom are becoming some centers of the tension. It's just because the situation in the economies there have really thin moments, and if situation will keep deteriorating more, those thin moments could be broken and could lead the triggering process of the chain reaction in global finances. Because the role of the United Kingdom and Japan in global finances, you understand, actually not small. So, and currently it makes sense to consider the situation there just because of the new budget that have been provided by the Minister of the Finance, United Kingdom, the common decision from the Bank of England next week. So it's a lot of interesting moment right now. But in general speaking, we think that the Great British Pound might become the next currency with a stable downside trend in the nearest time, additional to the euro. So, speaking about the euro directly and in general, the data that we've got in the United States, were really a lot of events, and a major part of them have been focused and concentrated in the politics. Just enough to mention the political showdown in the United States, in the FBI, in different government authorities, massive firing of the employees. So it's really something, some mess is going on there. But at the same time, we've got the gross domestic product, we've got the personal consumption expenditures. Although at the first glance it seems boring, nothing is going on there. But if you will take a look at some details, the picture is becoming more evident. And that's actually what we have done in today's report. Now, speaking on the technical picture, let's focus on the short-term perspectives. First of all, we have to acknowledge that the bearish grabber on the euro and the bullish grabber on the dollar index has been confirmed. It means that currently the major target stands above this area. This is on the dollar index, and on the euro it means that it will be below these lows. In fact, if we take a look at the weekly chart on the euro, you will see that we also have here the bearish grabber. If we return back to the idea of the long entry that we discussed on Friday, if you remember, we have specified two, or better to say three conditions. First, on Friday we said, let's now hurry up to take the long position, because overall performance on intraday charts looks weak, and would not exclude the chance that the euro could show another downside action, which actually has happened. Second, if you still would like to take the long position, you have to consider minimum two points. First is appearing of the grabber on the daily chart, right there. Second, completion or appearing of the clear reversal pattern on the intraday charts. And here the situation stands different with these two conditions. First of all, let's talk about this grabber. It is a really tricky moment with this pattern, because if you take a look at the retail brokers, you will get this grabber on some of them and you will don't on others. For instance, here is a broker's FXCM, it shows that we have it. Take a look at the Saxo Bank, it shows that we have it, but on the shows that we do not have it. Second, if you check this on the futures of the euro currency, you will not get the grabber. So this is 50-50 situation with this grabber, and I suspect that it might be just the byproduct of the moment of the closing, of the price closing. So sometimes it happens on Fridays when the market can't show further performance just because markets are cut by the time. So this cut moment of the time and market just closed at the point where it stands. That's all. We will see it on Monday. But currently, this is really tricky moment with grabber. I wouldn't rely on it only on this pattern for a position taken. Second moment, as you will see a bit later, that situation is not clear with the reversal pattern that we also have discussed. And actually, it has not been formed. Yes, potentially, we have this big head and shoulders pattern that might appear here if market starts upward action. But the question is only about the level where upward action could start, and second, what you're going to do with the grabber that we have on the weekly chart, because it's just taken out of these lows, which means the failure of this pattern in one or other way, either with the retracement and then drop, or immediate downside dropping. By the fundamental background, the appearing of the grabber currently seems more reasonable, and the downward action on euro currency now seems more reasonable. So we will see. On the 4-time frame chart, meantime, what we have clear shape of the hand shoulders. The market is just trying to break the road down for the confluence. It is a bit choppy and bumpy road, but it is working. So market stubbornly trying to break it down and is moving lower and lower. So this hand shoulder stands in place. And on Friday, by the way, as you can see, after the pullback that we discussed, this collapse has happened, and Friday close still has become lower. So, taking it all together, we consider few patterns and trading setups that might create our trading plan. Here's on hourly chart. Don't really be scaring. It looks a bit sophisticated, but in fact, everything is simple. So first, let's start with these hand shoulders that we have on 4-hour time frame chart. Its target stands very close, around 103, slightly below this blue line. So, in fact, market stands rather close, and this target, it's 103 level, it doesn't contradict the idea of these hand and shoulders. So actually, you can see that the shoulder stands slightly lower than this one, and theoretical market could keep going slightly lower. Despite that grabber or no grabber, it doesn't actually matter. So, that's why in the beginning of the week, we should be focused on the completion of this downward action. This free drive might become the finalizing pattern for this action, because the potential third drive stands at around 103.30, very close to the OP. So some spikes or appearing some volatility around this area could complete the both. And at this point, we appear at the bottom of this potential, some kind of the hand shoulders pattern, something of this kind. You also could see it on the 4-time frame chart of the cable that we already talked about. And that I would call as a vital moment for the week, supposedly. Because if market break it down, it will trigger the chain reaction with the failure of the hand shoulders on the daily, right? So market will start showing too deep downside action with accelerating. And obviously will show that the grabbers are dominating, I mean on the weekly chart, on the dollar index, on the euro currency, are dominating in the current situation, pushing price lower back to the lows. This breakout of the 103 area will open road to the 101 lows, 102 lows, so they will be retested. Conversely, if market will start forming something here, showing some bullish performance or some signs of the reversal, it could trigger upward retracement. It's not necessary it will be in the way as I draw it here in the hand shoulders or something. It might be just the pullback here. But at least that might be the not bad background for bulls. If you still would like to take the long position, trying to, maybe it makes sense to do it not here, but wait a bit and see what will happen around 103, 103.30 and trying to catch here something bullish. If we'll get some reversal signs here, it's a bit safer and more reliable level to consider long position taken. At least you will get the protection to an ability to move stops to the break even from the 103, which with the better chances than you will try to do this right here. And then we will see what will happen and what shape the price will take. This is just one of the possible scenarios. If market, for example, will start forming kind of the ABCD pattern. And what is even more interesting is that if even this reaction will start, the market will form the ABCD, it probably will not destroy the grabber that we have on the weekly chart. It might be just some part of the reaction. And in this case, bears will have to be patient and wait for better levels for entry on the short side until the moment when the grabber will be still valid. So this reaction doesn't suggest that we should get above the 105.30. as will be some inner retracement, some pullback reaction at this level, and so on. So that's actually what we have. In 2 words, watching for 103, 103.30. That is a vital area for a coming week. As for the bulls, as for the bears. So breakout means downside action to the lows around 102 or even lower. Holding there, bring bulls some chances, if not on some big action with the daily hand and shoulders. Maybe if this pattern will not be completed with a big retracement, but at least it might starting to act with a possible failure on later, but some reaction here from 103 might start. And that could give the good chance for the bulls to consider position taking. At least it will be more or less safer done right from this area. So hopefully I not really make you tired too much with this discussion, but this is that moments that we have, and we have to provide the clarity and explanation. Let's just make it simple to act with the market. So let's keep watching and see what will happen next week.